So let's start that. Okay, good morning. I'm Nicole Christian. I'm the Garrett County Chamber of Commerce president, and I welcome you to this special webinar we are hosting this morning, talking about the Employee Retention Tax Credit Program and the Work-Share Unemployment Program. This can certainly provide different financial assistance for your business. A lot of you were able to secure PPP or EIDL funding, but this is also both of these programs could also offer you other alternatives. So we're really glad that you joined us today, and we have a great lineup of speakers for you. We have Ashley Wilson, who is the VP and Head of Strategic Initiatives in the Congressional and Public Affairs Division for the U.S. Chamber of Commerce. We also have joining us Jennifer Gray, who is the Director for Federal Legislative and Regulatory Services for KPMG U.S. And we have Bryan Moore, the Deputy Assistant Secretary, Division of Unemployment Insurance for the Maryland Department of Labor. And most of this is going to be a question and a conversation this morning, and we will utilize your questions as well instead of just having slides on the screen. So we're going to start with Ashley and Jennifer, and certainly feel free to tell us a little bit about yourselves, and then we'll get right into talking about the Employee Retention Tax Credit. So Ashley, I'm going to go ahead and turn it over to you, and I thank you for joining us this morning.
Thank you, Nicole, and thank you to the Garrett County Chamber of Commerce. You all have been great partners to us, and I'm confident that your leadership in Maryland and together we'll be able to work through this crisis and get on the other side. That's what everyone's hoping. I'm personally excited to get past this phase of working next to my 9-year-old and my dog, who might be barking in the background, and just kind of get to reopening, which of course is going to present its own challenges, and just as the closures have. I am Ashley Wilson, again, VP of Congressional Public Affairs. I handle all the tax and economic issues for the Chamber, and oftentimes we aren't able to go really deep on some of these fast-moving issues, and that's why I wanted to bring along Jennifer Gray, who is a wonderful friend and an expert over at KPMG. She does these webinars all over the country, and what we really wanted to do is to redraw people's attention to the Employee Retention Tax Credit, because as Nicole said, once you move past PPP, maybe you've taken the loan, maybe you're not eligible, but you know, looking at the ERTC or the Employee Retention Tax Credit is a really good option. The IRS just recently released a frequently asked questions document just this week that covers a lot of the issues that are out there. But in short, and what we want to concentrate on is that this is a fairly good and favorable business for business credit. And we want to recommend that you look at it. And with that, that's why, again, I brought Jennifer Gray, who is Managing Director at the Washington office, to help us kind of answer a lot of these questions. And then we can just have a free flow Q&A session from here. So,
hi, Ashley.
Hi, Jennifer. Thank you.
Hi, thanks so much. I appreciate you all having me on. I was just driving through Garrett County in the last month or so, so I know the region at least a little bit. The first thing I wanted to point out is a lot of these tax changes that have happened with regard to COVID-19, the focus of Congress on these is to try to increase folks' cash flow. We know cash flow is a huge issue right now. Congress knows that. So almost all of these tax changes that they've made, that was their primary focus. And of course, the ERTC is one of those. Before I get to that, I wanted to briefly mention, just really briefly, two other things, just to make sure folks are aware of it. They did change and delay some filing deadlines for some tax issues, so make sure you look at those. For instance, most of the taxes due on April 15th are now due on July 15th. We are keeping an eye out to see if they change more of those filing deadlines or not, so keep an eye out for that. The second thing I wanted to mention is there is a payroll tax deferral. So again, look at that to the extent you have the employer Social Security tax share of your payroll taxes. There is a deferral in place, so you can put off sending that money into the government for up to a year, in some cases up to 2 years. So make sure you look at that as well. Again, just a cash flow issue here. So getting into the employee retention credits, I'm going to start out with the caveat that if you took a PPP loan, you are currently not eligible for an ERTC. Now, folks in Congress are looking at potentially changing that. So if you have a PPP loan, keep an eye out if legislation passes in Congress. I know Ashley in the chamber will pass that information along if there are any changes. They are considering maybe changing that, that rule there. But for now, if you took a PPP loan, you are not eligible for the ERTC. So with all the caveats up the front. So again, the employee retention tax credits, they're trying to help companies with their cash flow. The way they did that is they put in place a 50% credit. This is against your payroll taxes. It would give you a 50% reduction up to $5,000 per employee, assuming they have the qualified wages. So basically it's a 3-step process to figure out if you qualify and how much you qualify for. The first step is figuring out if you are a qualified employer or qualified business. So there are everything in the tax code, of course, has to be complicated. So there are 2 ways to qualify. Probably the most simple is you take a look at your quarterly receipts for the quarters in 2020. You compare those to your quarterly receipts the year before in 2019. If you have a 50% reduction or more in your quarterly receipts compared to last year, then you should be a qualified employer. So that's way number 1. Way number 2 is if you
Jennifer, we lost you.
Oh,
You're there. Now you're back.
you hear me?
Yes.
Okay. Did you hear where did I cut out?
When you were talking about the second way to qualify.
Oh, okay. Well, that was quick. Good. Okay. So the second way to qualify is if your company, if your business was subject to a government suspension due to COVID. So that could be a partial shutdown, that could be a full shutdown. This can get pretty complex. You will probably, well, you will want to talk with your tax advisor on this, your accountant, your lawyer, whoever you work for, because it's definitely a case-by-case issue. You're going to have to look at your particular facts and circumstances. But again, one, it has to be a government shutdown. So just because maybe you shut down because you're not getting business, that type thing, that does not count. It has to be related to a government order due to COVID. It could be a full shutdown, which I know a lot of you are dealing with right now, or it can be a partial shutdown. So it's possible, even if you are an essential business, that you could still qualify under this mechanism because of partial shutdowns. For instance, if you have more than one line of business and one part is shut down and one part is not, it's possible you qualify. It's even possible if you're an essential business, if some of your suppliers are impacted so that you cannot get the supplies you need, it's possible you could qualify as a partial suspension that way as well. So it's fairly broad. It's a fairly broad definition. Again, it's very facts and circumstances. So you'll have to get into that to figure out if you qualify. So that's step number 1, is making sure you qualify as a company. Step number 2, if you qualify, is figuring out how much your credit could be. So you have to look at your employees. So if you, again, because it's taxes, again, two issues here you have to look at. The qualifications are different if you're a smaller employer, if you have 100 or fewer employees, or if you have greater than 100 employees. I'm going to guess there are a lot of under 100 employers on the line. So the issue there is you have to figure out if your employee qualifies. So you're going to look at their qualified wages up to $10,000. So 50% of $10,000 per employee. So potentially a credit up to $5,000 per employee. If you are a company with under 100 employees, basically all the wages you are paying to your employees count, whether they are currently working for you or if they're furloughed, whatever the situation, up to $10,000 per employee can count. If you are a larger employer, greater than 100, the only wages that count toward this $10,000 to qualify for the $5,000 credit are the wages that you pay for time that the employee is not providing services. Now, health insurance counts. So for instance, if you're a company, no matter what size, and you say have furloughed some employees, but you've agreed to help cover their health insurance, you're still paying their health insurance, it is definitely possible that those health insurance costs can qualify as wages and can help you get this credit. So that's step number 2, is figuring out how much your credit is going to be. And step number 3, of course, is claiming the credit. Generally, the way you will claim this is you will go through your payroll tax credit filing process. So your 941, which you file occasionally when you send in your payments for your withholding taxes, that is the form that you will use to claim this credit. And then there is accompanying form, a new form, 7200, 7200. That form helps you actually get a refund from the government, a quickie refund, they're calling it. So you can actually get some of that cash back from the government, depending on the situation, if your credit is more than what you actually owe in taxes. So one, if you get the credit, that means you don't have to send your taxes in, so you get the cash flow there. And if the credit is actually more than the taxes that you need to send into the government, you can actually get a refund, and you could do that relatively quickly. Again, the government here is focused on cash flow, so they set up this process where you can actually get that refund in relatively quick order. So that is what I have. Ashley, I'm going to turn this back over to you.
It might make sense just to kind of jump into some of the questions, and then we can go from there. If there's any questions.
Yeah, let me start here, Ashley. I have a few questions for you. So when we're talking about the eligible companies, and I'm not sure if this is better for you or Jennifer to answer, is it only for for-profit businesses? Or I see that on the guide that the U.S. Chamber put together, it does talk about tax-exempt organizations under the 501c tax code. Can you address 501c organizations and nonprofits and if they're eligible?
Jennifer, do you want to do it, and then I can cover?
Sure. It's definitely possible that if you're a 501c3, you could be eligible. Again, everything is facts and circumstance, but you are certainly within the pool of folks who may be eligible. I know if they pass more legislation, which they are considering, they're looking at possibly making it easier for 501c3s to qualify. So again, if legislation passes, if you're a 501c3, I would go through the process now, see if you qualify. I think there's a good chance you might. If you don't, make sure you keep your eyes open for further legislation. I know Ashley and your local chamber here will make sure to get any information out to you if there are any changes.
Yeah, Nicole, we've seen chambers and others sort of apply and have some of this, and so the guidance isn't very clear. We are working with Congress to ensure that that's real specific, so that we can to change it, and so that it's more for nonprofit to apply.
And that sort of brings me back to an earlier point with not just regard to 501c3s, but to anyone considering this. Again, unfortunately, there's not a lot of guidance from Treasury on this issue, and unfortunately, this is one that I would highly recommend you talk with your tax professional just to make sure you pass that hurdle of if you qualify, and then 2, how much credit you qualify for. I think working with someone would make a lot of sense on this particular area.
So then the next question I have for you then goes to partial and full closures of the business. if a business, if the actual office building is closed, but the employees have been working from home or teleworking, is that considered then a partial business shutdown?
I can look at that actually. Again, it's facts and circumstance. Generally, if your employees are working from home, that alone is not enough to qualify you. So you're going to have to look at what else is going on in the business. But if you are a company where most of your work can continue to be done by your employees because they're working from home, those wages may not qualify. And again, you're going to have to work with your tax advisor. Depending on how your company is set up, it's possible you could still be a qualified employer for some wages, but not all. So, I hate coming back to it depends, but I'm a tax lawyer, and it depends is usually the answer I have for almost any question.
So I'm sorry, please go ahead, Ashley.
So we've gotten a lot of questions like this. So, even if you're working from home and maybe your employee doesn't have a computer, but then was given a computer and now can work, how much of their wages can apply, these kind of things. Or maybe if your employee has had childcare issues, but now doesn't. So there's all these circumstances that are, they don't make real clear, but we say go ahead and apply because it's a very generous credit, but talk to your accountant.
Yeah, absolutely take a look at it. The fact that your employee is now working from home in and of itself does not qualify you, but there are certainly circumstances around that. For instance, some Ashley pointed out where it's possible up to a point their wages would qualify because they're not able to work, but perhaps that changes over time as the situation evolves.
And if the business does have that 50% decline in gross receipts for that quarter compared to the same quarter in 2019, would that then make the business eligible? I'm sure it depends on the circumstances too, but if that's a possibility for that particular circumstance to then make the business eligible.
Generally, yes. So there are two ways you can qualify. One is you have that 50% drop year over year versus last quarter in 2019. That is one way. If you meet that, then you can move on to step 2, which is determining how large your credit can be. The other way, of course, is the somewhat more complicated. Are you subject to a full or partial shutdown due to a government order?
Please mute yourself. If you're not speaking, please mute yourself, and please enter all questions through the comment box for Jennifer and Ashley regarding the employee retention tax credit. So Ashley, this one may be more for you, and I know you said that Treasury is still providing guidance and making changes, and I believe we do have a link to Treasury's website on the Chamber's resource page. But on the guide that the U.S. Chamber put together, it talks about how is the credit paid, and the very last part of that says that there is a possibility to receive an advance payment of the tax credit. Has Treasury actually developed that process yet, or is that an actual possibility at this time for some businesses? Please mute yourself. Could I ask everybody, Bryan Moore, please mute yourself. Thank you.
I think that's what Treasury wants to see happen, and I'm right, Jennifer, with the frequently asked questions that come out.
Right, they have put out forms. The form you're going to want to look for is IRS form 7200. So that is the form they've put out to try to help folks to get an advance refund of that credit. So again, it's IRS form 7200.
That was part of the FAQ, and they could really tighten that up. So it was, you could look for that form and get an advance payment.
And have you seen that often? Is that actually working for some businesses?
I've known businesses who have said that they are in the process of doing, getting that. I don't know, Jennifer, in the wider KPMG, have you heard of anyone actually receiving the money yet?
Honestly, I'm not sure. It's so early, and I know folks are in the process, but I don't have any reason to believe folks would not. So I would highly encourage people to look into, again, that form 7200. I don't have any concern that folks would not receive the payments that are due to them.
Yeah.
Okay. Well, I don't think we have any more questions at this time, but certainly if any of our members who have joined us today that come up with other questions, certainly enter those in the comment box, and we'll make sure that we relay those to Jennifer and Ashley, and we'll come back to more question and answer at the end. However, for now, I do want to switch the program over to Bryan Moore. Again, Bryan is the Deputy Assistant Secretary, Division of Unemployment Insurance for the Maryland Department of Labor. So, Bryan, thank you very much for joining us today. Bryan is going to talk with us about the WorkShare Unemployment Program and how this could be another option for you to, as an alternative to layoffs. So, Bryan, I'm going to turn it over to you. So make sure to unmute yourself. I know Bryan's been having some computer trouble, so unfortunately he's not able to join us with video, but we do have him here on audio. So Bryan, could you tell us about the WorkShare program and how that works?
Good morning.
Good morning.
You hear me?
Can you hear me?
Well, we've got a weird echo.
Yeah, I'm hearing
I'm
that.
echo as well.
If you have your computer logged in too, that's because you have both the computer and the phone, so you might just need to log off on your computer.
Is this better?
Yes, much better.
Okay, great. So good morning, everyone, and thank you, Nicole, for having me here today in the Garrett County Chamber of Commerce. I'm here this morning to talk to everyone about the work sharing program that the Division of Unemployment Insurance with the Maryland Department of Labor has, and we're very, very excited about to offer to employers, particularly those employers here in the context of reopening your businesses subsequent to the pandemic that we're under right now. And so, generally speaking, work sharing is a layoff aversion program in which an employer under a state-approved plan that will be approved by our office reduces the hours for a group of workers, and these workers in turn receive a reduced unemployment benefit payment from the Division of Unemployment Insurance. So let me give you an example, and I'm going to talk about work sharing in general, and then I want to talk specifically about how it can help those businesses who are attempting to reopen. Generally speaking, let's just use a simple analogy to keep the conversation simple. If a normal work hour for a full-time employee is 40 hours per week, and an employer is going through experiencing some type of economic turndown where business is not flourishing as it normally would, and so they need to think about how to better manage business operations. One of those things they're going to think about, unfortunately, is laying off employees. Well, to avert the layoff, work sharing could be available whereby those employees who would otherwise be subject to a full-time 100% layoff will instead get their hours reduced by 20%. So they'll go from a 40-hour work week to a 32-hour a week work week. So they basically lost an 8-hour work day. So under a work sharing plan, those employees that have gone from 40 hours a week to 32 hours a week will receive 20% of the unemployment insurance benefit amount they would be entitled to had they been laid off full time. And so they will receive 20% of their unemployment insurance under this scenario. So let's say that employee would be entitled to the maximum benefit amount in the state of Maryland had they been laid off 100%. The maximum benefit amount in Maryland is $430 per week. So that individual would receive 20% of the 430, which is $86 each week, in addition to the 32 hours that they're working where they're earning wages. The good news for those employees who are being impacted right now is, in addition to the 20% or 30% or 40% or 50% or whatever the reduction of work hours that they're going to suffer from, they would not only get that percentage of unemployment insurance benefits during this period of time, they would also be entitled to the $600 per week in the pandemic unemployment compensation funding that's available under the CARES Act. That money will be available to them through July 25th of 2020. So in Maryland, the range, the percentage that an employer may reduce the work hours of a group of employees would be as low as 20% of their normal work hours and as much as 50% of their normal work hours for a given week of time. So now let's look at this in the context of COVID-19. You now have employers who were not considered non-essential businesses that were forced to close down as a result of an executive order by the governor, and now are phasing in to reopen. And so some employers, many if not all, will undoubtedly struggle with a cash flow right now as they're trying to reopen. And so they may need to look at some of their business practices, which includes personnel. And so let's say an example, an employer may have been forced to lay off 20 employees because they had to shut down their business, a small business. Well, now it's time to reopen. That employer may find themselves in a predicament where it's going to be difficult to bring the entire labor force back on board. So they would have to make decisions in terms of the 20 that they laid off, how many are they going to be able to afford to bring back, and at what number of hours can they bring them back. Under a work sharing agreement, they could bring them all back, reduce their hours, and those employees would receive unemployment insurance compensation under the regular unemployment insurance program plus $600 per week through July 25th of 2020, when that pandemic unemployment compensation program expires. So that's how it works in a nutshell. I'm here to answer any and all questions today. If I can't answer questions today, I certainly will provide Nicole with the answers to those questions as soon as I can get an accurate response to the question.
We do have a few questions, Bryan, and we'll start with one from Greg Deal. Greg has asked if an employer can go back and set this up for employees that we already were doing this for, and is there a benefit to the employee or employer? And I'm assuming that Greg means, and Greg might need to clarify his question, but Greg, normally we ask everybody to put their comments in the comment box, but I'm going to ask you to unmute yourself and go ahead and clarify your question for Bryan.
Yes, thank you, Nicole.
Okay, can you hear me?
Yep.
Yes.
Okay, so we've already had our employees in the exact situation you were mentioning. They worked 40 hours, we've cut them back to 32. You said you had to get this approved through unemployment. So, I mean, my people have already been getting unemployment benefits. Is there a reason to go back and do this short-term setup, because we're about ready to bring them back?
Yes. So let me make sure I'm hearing you correctly, because of what I thought you were saying seemed like it may be something different. So you're saying that are you a business that shut down 100% due to COVID-19?
No, we were only partially shut down.
So you remained open during the entire period of time. Okay. And so when you remained open, I'm hearing you say that some employees were laid off 100% and they filed for and started receiving unemployment insurance benefits, correct?
No one was laid off completely, just 1 to 2 days a week.
Okay, so their hours were reduced.
Yes.
So they were coming to work part-time and they were receiving partial unemployment insurance benefits.
Yes.
Okay, So, all right. So what you ended up doing was you created an initiative where they were receiving part-time benefits. We can bring you in to the work sharing program. And so what happens with, when I mentioned earlier that it's subject to a plan, because what you have right now going on is a typical arrangement where the employer reduced the number of hours, the person just went and got the UI benefits or not, but wasn't part of a formal work sharing plan. This scenario with the plan is more formalized, sir. And so we would ask you a battery of questions. It's not complex. It's not cumbersome process. We get applications approved. The state law says we have to get a decision made within 15 days. We're finding we can get applications approved in half that amount of time. So you essentially submit an application, and we call it a plan. Application is synonymous. You submit that to us with basically letting us know that specifically which unit of your operation, because many businesses have multiple units. And so every employee within that affected area under the program has to be treated the same. And so, for example, if you're laying off 5 people in the same unit, we're reducing their hours, let me say, you need to reduce their hours by the same percentage as opposed to having 5, 4, 3 different percentages of the time that you, in other words, the program contemplates all affected employees being treated the same way.
Okay.
You would then remember this is a layoff aversion program. So another one of the questions in the plan is basically asking you, but for the opportunity to have this work sharing program, how many people do you estimate will lose their jobs? And it's an estimate. So you give us a number based on your best business estimate of the number of people who will lose jobs if you don't get this plan effectuated. There's certain certifications that an employer has to agree to. That's set forth in our state law. And I mean, it's a fairly simple program. I think that what it does is give employers the ability to stay connected to the people who they have hired and trained in their business environment, as opposed to losing them. If you lay them off 100%, you may never see them again. So you may have just lost a valuable employee that you've invested a lot of time, energy, and money into training for another employee to enjoy the benefit of that employee. I would recommend you contact us, sir. Take a look at the application. Complete an application, and through that process, you can always withdraw it if you decide that it may not be the best solution for your company. I'm willing to say that I believe it would be long term, particularly now in the environment where those employees can benefit more than under a normal work sharing arrangement because of the additional CARE Act funding that's going to be made available to them for a short period of time.
And Bryan, just as a follow-up on that question, if you do have a group of employees that a specific unit that has been laid off, and you do know at some point in the future you are going to bring them back full time, can you go ahead and hire them back on a part-time basis or on at a reduced number of hours? And even though that part of your business is not fully operational, and then take advantage of the work share program during the time that part of the business isn't fully operational?
Let me make sure I'm understanding your question correctly. And I want to say the answer is yes, if I'm understanding you correctly, Nicole. So if the question is, can an employer who's laid off employees that wants to bring them back now, can they rehire them and put them on the work share program? Is that your question?
Yes, and
Okay.
especially because that part of the business might not be fully operational for a while yet.
The answer is yes, you can. Answer is yes, you can. And so my part, I think the gentleman's name was Greg. What I thought he was going to ask, and I really want to take the conversation there as well, is that you have multiple types of employers that's existing right now. You have employers that were forced to shut down, and so I'm talking about a strategy as they begin to reopen their businesses, how they can benefit from the work sharing program. But also you have businesses who never closed down completely or at all, who may have had the need to reduce hours of their employees because of the realities of operating businesses in this current environment. Those employees may not have filed for unemployment insurance benefits. Under Greg's scenario, they did. But you may have some that reduced from 40 hours a week to 32 hours a week, and those employees simply just worked a reduced number of hours and have been doing so for quite some time now. Well, we're willing to work with those employers to make it retroactive. And we can only go so far back, because the federal rules just came out on last week, and we've been waiting on. I heard the previous speaker talking about the guidance from the federal government. They're slow to give us guidance on these programs that they're rolling out, and we sort of hesitant to make a move without getting further clarification from the federal government, who's going to turn around on the back end and audit it, right? So we got to make sure we can pass an audit on the back end of this.
Sure.
But in that scenario, we can go back and do a work sharing agreement with those employers who have been open during this entire time of COVID-19, and give those employees the unemployment insurance benefits that they were not receiving because they never filed for benefits.
Okay. Is there a compensation limit an employee can earn under workshare, or is it solely based on hour reduction?
It's no limit on their compensation level. What workshare is going to do is pay the employer is going to pay them for the hours that they're working, and the Division of Unemployment Insurance are going to pay them a percentage of the unemployment insurance benefits they would have been entitled to receive had that employer laid them off 100% of the time they were working no hours. And in Maryland, the maximum amount one can receive is $430 a week. So it will never be greater than $430. And so, but it would be a percentage of a person's maximum benefit may be $200. If their maximum benefit is calculated at $200 a week, then they'll get a percentage of the $200. And that percentage is going to be the same percentage of the hours that their work hours have been reduced. So if they get a reduction of 40 hours, they'll get 40% of their benefits. If they got a 50% reduction in their work hours, they're going to get half of the unemployment insurance benefits that they've been entitled to. Am I making sense?
Yes, and also then it's important to point out too that under the CARES Act, those individuals would also receive the additional weekly $600 of pandemic unemployment compensation too.
Absolutely correct.
Okay.
That's what I was saying earlier. This is the perfect opportunity to take advantage of it from the employee's perspective, because under a normal work sharing agreement, that employee is limited to the percentage of UI benefits and the wages that they've been receiving from the employer for actually working. Now it's the wages for working, it's the unemployment insurance benefits, and it's the additional $600 every single week. And we're now in May, so they still have the remainder of May, they have all of June, they have until the 25th of July to receive $600 per week. So it's important for employers that want to take advantage of this to take that into consideration when they're making a decision on the percentage of hours that one would be reduced.
And we have another question here from Steve Green with Time Out in Sports, and Steve asked, do you get penalized if some employees do not work the available hours? And Steve, we may need a little clarification on that question if you can unmute yourself.
Hi, Steve. Like, I think we just, okay. Hey, Steve.
He may be trying to unmute here.
Okay, no problem.
Well, see if you can go ahead and answer his question, Bryan.
Can you restate it?
Yes. Do you get penalized if some employees do not work the available hours?
The short answer of that is I wouldn't say penalized, but all employees that are part of what we call the affected employees, all those employees as part of a work sharing agreement must be available for the number of hours that the employer has for them to work. If that employee does not work those required hours, they may be penalized, but the employer would not be penalized. In other words, that may impact their benefits that they receive from us for that given week, but that would not adversely impact the employer and its work sharing plan with us. We'll just make whatever adjustments we need to make with that individual employee.
Okay, so it doesn't hurt the overall plan then from the employer.
We'll not allow that to happen.
Okay. Our next question.
And let me just add this is it is important to note that right now, what we're doing here in Maryland, I hope all other states that have work sharing programs, or those states who don't have it that's contemplating starting a program, to be as flexible as the federal laws I'm talking about now, it allows us to be. And so we're invoking all flexibilities that we can think of. We're advocating on behalf of our employees here in the state of Maryland to the federal government. We're waiting on further guidance from them. We had a meeting that was supposed to be scheduled this afternoon that was postponed with United States Department of Labor. Hopefully we'll get a rescheduled date because Maryland and several other states have a litany of questions that we need to have answered to give us more flexibility that we want to institute, at least during this season, which is throughout the end of December 31st of 2020, when the CARES Act expired. So I just wanted to make sure we put that out there. So we're doing everything we can on our end to fight for our employers to make sure we have all the flexibility for this program.
So Bryan, you mentioned earlier that obviously now is a good time to take advantage of this program and put a plan together and apply for it. It is our understanding, and this comes from one of our participants, Shane, that there is typically a 15-day turnaround for approval of a work share program. What is the current turnaround time on receiving approval for plans submitted during this pandemic? And well, I'll let you answer that first, and then I'll go to the next question.
Right. Right now, the average amount of time is about around 9 to 10 days. And those are actual calendar days. They're not business days. We have had one or two plans over the last couple of weeks that may have carried over to a day or two past the 15-day limitation, and that was really some back and forth that's going on, making sure that we have T's crossed and I's dotted.
So in order,
I want to add another thing, just so employers who are listening right now can understand how this program is taking off, and it's a good time to get on board. Before COVID-19, Maryland was operating in full employment, so there was no serious economic turndowns that were taking place in the state. And typically, under normal circumstances, work sharing or short-term compensation programs, as is also known as, are very limited in terms of being able to approve employee applications because very specific economic conditions must take place. Well, now we're dealing with a COVID-19 pandemic, so the economic conditions are the same for everybody in my mind. And so we, before COVID-19 came into effect, we had 2 work sharing agreements in the entire state of Maryland. We now have well over 160 work sharing agreements that have been put into place over the course of the last 3 or 4 weeks.
Wow.
So it's on the rise. Yeah.
Definitely. So our next question, and I think you may have answered this, but an employer has to actually sign up for the program and submit a plan in order for any of their employees to participate, correct?
That's correct.
Okay. So then the next question is, are there, what is, I guess, for people that need help with putting this plan together and submitting it, who are the best people? I'm probably on your staff, Bryan, or through the Department of Labor. Are there people that they can speak with to help them put these plans together and go through this process if they've never done it before?
The answer is absolutely. A great question, and I'm glad you asked that question. So yes, we have 4 employees that are part of the unit that's reviewing those applications and recommending them for approval. And I'm the person who signs off on all of the agreements. So I'm approving, denying applications, and I'm trying not to deny anybody's applications during this period of time, which takes me back to the whole point of being as flexible as possible. But also because I'm anticipating an ultimate explosion in popularity of this program, I'm actually in the process of interviewing to bring on even more employees to stand that unit up to scale to be able to continue to provide efficient technical assistance and guidance to employees who may have questions they need to have answered in the application process, to get those applications reviewed as quickly as possible to me so that I can sign. So every Friday now, I'm signing applications. So that's my standard day to meet with my team with the applications that they have in any given week. And we go through those applications to make sure they're complete and they're accurate and can withstand an audit on the back end and get that employee on board. And so another thing I want to mention is that the way we're setting this up is that the ease of use is very important to me. Excellent customer service is very important to us. And so we don't want anyone, the employer or that employee, to have to do more than what is necessary. Right now, that's basically getting that application to us with all the information completed on that application. Those employees, that's part of the work sharing agreement that's being affected by it. If they're not already receiving unemployment insurance benefits, we're going to take care of all that paperwork for them. We will take care of receive their continued benefits throughout the process. And so it won't be as arduous a process as it would be for a normal person who's trying to get through the very complicated unemployment insurance process.
Great. And we also had a comment that you need to make sure to get your employees to sign off on the plan, even if your company doesn't operate through, that your employees don't operate through a union. So before an employer submits a plan, they need to have agreement from their employees. Is that correct, Bryan?
Okay, so good. Another good question. So on the application, it's going to ask us a few things. One is going to ask them, have they notified the employees who have been affected by this plan if it's approved? If the answer is yes, we're going to ask them, how did they notify them? If the answer is no, we may ask why not. Okay, then there's a question that's going to specifically ask them if their employees are part of a collective bargaining agreement. If the answer is yes, it's going to require them to have the signature of whoever represents those employees as part of the CBA. If those employees are not a part of a CBA, we just request that they get at least one of those employees to sign off on the application that they have knowledge that work sharing is going to take place. And the the main purpose behind all of that is just to make sure that no one's being blindsided. Everyone's in the know. If an employee refuses to sign, it doesn't stop an employee from getting the application approved.
So assuming that the application is approved, what is the reporting process while the employer is participating in the plan? Does the employee remit, some type of online certification, or do they report hours to unemployment? What would be required of the employee during their participation in the program? Of the employer, I'm sorry.
Very, very limited. We will monitor the program periodically to make sure that the plan is being executed in accordance to what we agreed to. But there's not going to be any arduous, you have to get this report into us by this deadline, 5 p.m. on Friday, anything like that. No, we can easily keep track, because those employees, we're going to have to record their time. When we do a weekly certification with them, they're going to have to certify that they worked or did not work to earn wages. You follow me? So because if they report wages greater than what it's supposed to be, we're going to have to reduce their benefits.
Okay.
So it's going to be very, very limited on part of the employer. I'm telling you, it may sound too good to be true. It may be because it is too good to be true, but that doesn't mean it's not true.
I'm actually going to bring back Ashley and Jennifer now, and to have just and Bryan, please stay on the line, just to have a little bit more discussion here. So we have a lot of different assistance programs that are out there. We know that if a business received PPP, they cannot apply for the employee retention tax credit. I'm assuming that the work share, and I'll ask any of the three of you to answer this. Bryan, we'll start with you. Work share program is not impacted by PPP or EIDL or any other type of business assistance that the employer received. Is that correct?
Let me answer. The best way I can answer that question, Nicole, is that's not a question on our application.
Okay. So then Ashley and Jennifer, when you consider all the different business assistance programs out there, we know one of the issues with PPP is you only have it for 8 weeks of payroll. When you consider, and a lot of businesses were able to get that PPP, and that grant was extremely helpful to them. Going forward, once the PPP money has run out, are there, do you recommend or suggest other programs then that they should take advantage of?
From a tax perspective, there's certainly the program that allows you to delay paying your payroll taxes. That's the first one that comes to mind. Actually, I probably need to pull up the parts of the bill. As to be honest, it's been a while since I've looked at it, but there are a lot of other things. If you have, say you have net operating losses, you're overall losing money this year, there are mechanisms through the tax code that you can file and carry those losses back and actually get refunds for taxes paid in previous years under certain circumstances. Again, with this bill, their focus was on cash flow and trying to figure out what they could do to try to help companies to, to get as much cash in their pockets as quickly as possible. So I know they put the NOL carryback in there. There are similar provisions that apply for pass-through entities. If you're a partnership or something along those lines, there are similar provisions that allow you to potentially carry back losses and get refunds for previous years, for taxes paid in previous years. If you are a corporation, you have an AMT, an alternative minimum tax credit, if you're in that position or not. If you are, they've tried to put in ways for you to monetize that more quickly. If you were giving money to charity, they've tried to put in ways for you to get benefits from that more quickly than you might otherwise. So there's a whole list of things. I suspect Ashley has, the Chamber's put together a list of those sort of things that they can make available. Sorry, I'm just taking a quick look at my list here.
I guess
so those are things that come to mind immediately from a tax perspective.
I guess I would also add the Main Street lending program. It's run through the Federal Reserve. The final details were kind of released in the last week or two. It's about, you know, loan amount minimum of, you know, 500,000. Maybe if you're a small shop, this isn't great, but the maximum amount it would be 25 million. But you would need to have 100 employees. That's a good program, a low interest loan. And we have a lot of resources on the Chamber website. We have, we've worked through, we have the healthcare coverage option, the unemployment insurance under CARES Act. We have a sort of like an idea of like phase 4. We have liability. We're working on liability concerns for companies. That's going to be our #1 priority moving forward. That it's a top priority of the Chamber, and we're really focusing, you know, as people go back to work, we want to make sure there's a safe harbor against any suits based on exposure. You know, I've got an example of home buyers suing a realtor because they got COVID. So, you know, we want to make sure those kind of liability issues are taken care of. There's healthcare providers. We want to make sure there's protection for healthcare providers that don't get sued for their don't get sued while they're kind of protecting others. And then there's product liabilities. About, you know, folks who are providing, maybe if you're a small business, hand sanitizers, there's liability there. I know there was one facility that somebody tried to bring a suit about the hand sanitizer wasn't up to snuff, and they were scared about that. So we want to make sure the liabilities don't happen there, and any kind of threat of security litigation. So what we're looking at is timely, targeted, and temporary liability. But again, as resources for the Chamber, we have the state map with guidelines of reopening. We have resources guides by industry. We know your state is producing guides, and if you want to share those with us, we can make sure there's a way people can find that as well. And, you know, if you have any examples of issues that you think we need to know, we need to talk to Washington about, please let us know. And also, you know, raise it with your members of Congress, because that's going to be very helpful and hugely impactful, because right now everybody's kind of on that next phase of returning to work and making sure everyone has the right help. So everyone's listening. And now's the time to give us those examples, or, you know, to tell us what you need so we can help you.
Great, thank you, Ashley, and Jennifer, thank you. I do want to point out for our participants on the webinar today, the Garrett County Chamber does have an entire COVID updates and toolkit section on our website, and you can see that under that section we have it broken down by basic information and updates. We have business resources, recovery, and some other information. Under our business resources section, you'll find some of the different guides and information on these assistance programs. We'll be adding more information on the WorkShare program, and we'll be adding the Main Street guide, that the Main Street Loan Fund guide that Ashley just mentioned. I do want to take this opportunity to thank all three of our speakers for this incredible information on these two programs and giving our businesses other opportunities to help with cash flow. So we're at the 10 o'clock mark, but I do want to give our three speakers just a minute as a wrap up to add anything else. So Bryan, we'll start with you.
Okay, good. Just to add that I think that all of the programs that we discussed today are very important programs. I know employers, businesses have to make some tough decisions as they continue to contemplate strategies to be profitable as they return to opening their businesses to the communities. I think work sharing is a great opportunity to give them some cushion in order to help them with their cash flow. I think they should, if they go to our website, marylandunemployment.gov, they can see all the questions and answers that we have on there for the work sharing program. If they go to ui.worksharing@maryland.gov, they can get an application to complete and get the process going.
Thank you, Bryan. Jennifer, any final remarks?
I think I would just make the point that Washington has put a lot of money into these programs. The goal really is to keep businesses, small businesses afloat through this, keep individual folks afloat through this. So please take a look at the various programs they have. Obviously, I'm focusing a lot on the tax thing, but as Ashley mentioned, there are lots of loans. I know that they also put a lot of money into trying to make more disaster relief loans available through the SBA. So they have put a lot of thought and effort into trying to help out businesses and small businesses. So, please take the time to look into some of the resources that your Garrett County Chamber and the U.S. Chamber put forward, and see if there's anything there that can help you get through this hopefully relatively short time period of challenges.
Thank you, Jennifer. And Ashley, final remarks.
Yeah, I just want to thank Garrett County and thank you for hosting us, Nicole. It's a really scary time for everybody. We are all in it, wanting to help small businesses and help you all get back to work. And we're working around the clock, having these webinars and having these discussions with everyone across the country. So you aren't alone. We're working for you. I know Nicole is working for you as well. And we do have all these resources. And please contact me, contact Nicole or Jennifer or any of us with these questions. We want to be a resource. We want to help. And again, I think I would just echo what Jennifer said. Washington is all about right now really providing the funds for businesses in any way possible. It's been a little frustrating start with the PPP running out, but they're looking at phase 4 to correct some of that, and it may take a while, but they're going to really look at filling in gaps of the CARES Act. So if you have issues or concerns, please let us know so we can make sure that those are fixed.
Yeah, if I could just point in, absolutely, please work with Nicole and Ashley and keep an eye on what legislation may be coming. The legislation that they've done so far is put together really quickly. They're now looking and seeing how maybe they could make things work a little bit better. So perhaps some programs that don't work for you now, perhaps after further legislation, they might work for you. So please continue to keep an eye on what's happening.
Well, thank you, all three of you, Jennifer, Ashley. If you have questions for Jennifer or Ashley regarding the employee retention tax credit or any of the federal programs, please send those to me and I'll get with Ashley and Jennifer on those programs. I do want to thank Bryan Moore as well and thank the state of Maryland. Bryan, thank your office. I know you guys are completely swamped right now, and it's certainly been a thankless job, I think, for a lot of people in the unemployment office for the state of Maryland. So I do want to thank you for everything you're doing to try to help our businesses and for presenting on this program today. If you have any questions, for Bryan regarding the work-share program or anything with unemployment, please send those to me as well, and I'll forward those on to Bryan. So Bryan, Ashley, Jennifer, thank you all so much. Thank you everyone for joining us today for the program. As I said at the beginning, we did record this webinar, so we will post the link on our coronavirus section of our website. If for some reason anyone was unable to participate or attend this morning, certainly tell them that they can watch the webinar there. Thank you all very much. Have a wonderful day, and everybody please stay safe.
Thank you.
Thank you.